Hello, ladies and gentlemen. Welcome back to another video. I can't believe I even have to make this video. But before we dive into today's topic, I wanted to say this is not financial advice, never will be financial advice, and I am not a licensed financial advisor. With that out of the way and understood, today's video, it's simply a matter of time for GameStop Corp and its stock. And the reason why I'm saying this is because over and over and over, I get the pressing question: did Ryan Cohen kill the short squeeze? I could say and answer this in so many different ways, but I am overall sick and tired of this narrative that this company is a piece of crap retailer, that its stock is down in the dumps, and that there's too much shenanigans for it to ever recover. And I'm going to tell you why, in my opinion, it is simply a matter of time. So, first things first, starting with the most important thing, and I will get into if I think Ryan Cohen killed the squeeze just here in a little bit. But first things first, this is the most important thing that we need to have a takeaway right here and right now. Where the business stands today, where GameStop Corporation is entirely different than it was back in 2020 and 2021 when it went absolutely parabolic. Its stock, I'm explicitly talking about. This is a completely different business, which is much, much, much improved since that time. Why do I say that? Because they have had one, two, three, four, five profitable quarters in a row. If you look at this chart dating back to the squeeze and pre-squeeze, that is not how GameStop's business was. Now, did they have some higher revenues? Sure, but profitability is ultimately the health of the company. When it's all stripped away and console cycles come and go, is the business consistently turning profit? They are right now. And GameStop, by the way, this is another incredibly important number to look at. They could have their most profitable year in the history, the entire history of the company, if they keep this up for another 2 quarters here. Now, Q3 earnings are around the door. I have done a preview for those courtesy of Region Formal. I would expect these numbers to stay positive for Q3. Q4, as we know, is GameStop's bread and butter. I am not worried about those reports. If they decline, if we see some concerning numbers, I could change my tune. As of now, this business has gotten better thanks to Ryan Cohen. So when people say, Reese Politics, did Ryan Cohen kill the short squeeze? Well, we can examine that. Let me know your thoughts in the comments down below too. Do you agree with that logic? Or are you more of my belief? And this is, again, this is what I think. This is not some theory. This is not tinfoil from Reddit. We can talk about a hype date later in the video, but it's not even a hype date. This is cold, hard business fundamentals from the company. So did Ryan Cohen kill his short squeeze? Well, what he did do is improve the business. Now, if you're going to talk about specifically the squeeze aspect of such, I would argue with you that the ultimate way to unlock this stock and its true price discovery would be to continue, after everything is said and done, the fails to deliver, the swaps, whatever, take that all away, is to keep churning profit and to keep, ideally, growing revenue. Now, that's the one component that still needs attention, but let's examine the claim that Ryan Cohen all of a sudden killed the short squeeze. Well, when Roy Kitty returned, he did this. He updated this right here, 26 April 2024, roughly around 2 o'clock p.m. Eastern time. Rory Kittinger posted on stockcharts.com an update to his chart. Now, there's a couple lines drawn on here. The box is drawn on here. We've seen this. I'm sure you've seen this if you've been around the GameStop stock block. If you're not familiar with this, he essentially updated this chart before making his grand return. He was playing options, I think, before this. But for the sake of this video, did Ryan Cohen kill the short squeeze? Well, at this point right here, when Ryan Cohen and the company caught wind of what was going on here and proceeded to dilute here, did he kill the squeeze? Well, not really. I mean, this is insanely high volume, and he took money. He did an at the money offering for shares for dilution, and the stock still ripped out of it. So, these are big moves, and arguably, he did not kill the short squeeze here. There is a second example that might be better. I will pull up in a minute here, but for all intents and purposes of this video, he took money from a high volume event. And I have explained too exactly what I think happened for this high volume event to occur by the rules, by the official rules that the stock market abides by. And you might be thinking or laughing to yourself, there's not many, and you might be right. But there are certain ones. Legacy fails were cleaned here, in my opinion. Ryan Cohen took the money. That does not mean that the stock would have ran to 100, 150, 200, $1,000 a share if he didn't do that. I don't think it would. I think it would have pulled back regardless, as you saw in this range here in the actual squeeze. This is nothing. This is not a squeeze. This is in my opinion, fails to deliver being cleaned, the company taking money, settlement coming in, the last of it, boom here, and then proceeding to go back into its swap theory cadence. Now, this to me, and again, you have to really think about the bottom line of the business. What did GameStop do in that moment? Well, they took money. They took money by increasing the share count right here in a super high volume event, right? So you have this happen. The company generates profit from cash with a high yield on that cash sitting there doing nothing on your hands. Ryan Cohen not pushing the button, sitting. That will increase the profitability and add to the profitability of the company. That is a smart and shrewd business move that Ryan Cohen made. Now, another time you could say, did he kill the squeeze? There was dilution here. This one made no sense to me. Absolutely. Let me know in the comments if you think the same way, but this made zero sense right here. When he raised capital, when GME was in the low 20s. Does not make sense. That's not killing a squeeze. I can say that with certainty. And look what happened after that. You had all those dilutions, whatever. GameStop goes up 70% on no news and nothing. Nothing, right? So then it comes down. After a good earnings report, it comes down. No news or nothing. Okay, so you're getting a theme here that there is something much greater going on than dilutions killing a short squeeze. That logic just does not hold up. And the reason why I say it's just a matter of time is because the business has improved. The profitability has improved. Collectibles is growing. What do you think? Shorts are eventually going to capitulate if this keeps up. The swap counterparty, the swap dealer, the derivative products, whoever is doing those OTC, someone is going to break with all of this time and pressure now that the business is actually profitable. And if we see revenue continue to grow or grow in general, you're going to see someone capitulate. And I think you'll see something that's much more reminiscent of an actual squeeze than all of this nonsense price action, which I think really is just sideways. It's just sideways. And I'm not saying that to be funny or trendy or edgy. This is not price action, especially, now this is price action, sure. After, the GameStop's earnings here, bond offering, whatever, boom, 72%, that's price action. This is noise. This is sideways from June 13, okay, second bond offering, to now. That's just noise. This is complete sideways price action. This moment here, the bond offering, now this is declining here, and then the bond offering being here. This is insanely high volume, okay? So if you're going to talk about Ryan Cohen killing a squeeze, 172 million volume right here would be one where I wonder if this Dorito of doom, comes back. Now, the bond offering is right here, by the way. It's not like it's right here. It's here. I wonder if this is where we could have seen some upward price action. And again, I don't think there was enough legacy fails or even fails in Richard Newton's chart, and we can look at that would have accounted for that. Richard Newton's model, which was working well at that time, had a final price roughly of $30 here in the red, $30.18, the highest peak. Okay, so $30.54. These expected moves were much larger in the 40s. Okay, so I do not think, and I think that rhetoric that Ryan Cohen killed a squeeze, I think is inherently dangerous. And I'm not being dramatic. It's inherently dangerous because that's what they want you to believe. They want you to believe that this stock is dead, that this stock is not going to rise, that this is the piece of crap retailer that the mainstream media keeps calling a meme stock over and over and over again. None of that is true in my opinion. This is a generational opportunity that they don't want you anywhere near, and they will repeat that manufactured line that Ryan Cohen killed the squeeze. All Ryan Cohen has done has put his money where his mouth is, meaning he is GameStop's second or third, or he was at one point GameStop's largest shareholder with his own capital. Two, he's improved this business and their profitability greatly since he's taken over. And share dilution and bond offering and this, that, and the other is uncomfortable. When people tell you and people say, oh, bond desks want volatility, bond desks trade bonds every single day. There's bonds being changed between hands, between desks. Some desks hold them, other desks flip them, and you can make money doing this. Look here, August 1, someone buys a lot of bonds, right? There's good volume that day. Less or just over a month later, they've gone up 10%. Okay, you can dump the bonds. Someone then can buy them and say, I'll give those, it was a great earnings report. Bonds go up by another 10%. Someone dumps them. I mean, they can do this over and over. This whole, they need volatility. They hedge with calls and puts. They do hedge with derivative products. That does not kill a short squeeze. It could aid a squeeze in the event that the bond desks, whomever then buys the bonds or hedges the bonds, if they, load calls on one side of that, on the other side of that trade, that could increase the potential for a short squeeze. And you could say it could increase the potential to keep it stuffed too. That's fine. But it has nothing, no underlining, bad forces working against the business. That rhetoric is so dangerous. So Roaring Kitty clearly saw something here. I think he knows the rule book better than anybody. He knew that legacy fails were going to be cleaned on the exact day that old TD accounts merged with Schwab. I think that is close to a fact at this point. Secondly, if you look at the technicals, this is just a little blip. Look at where it was during the squeeze, the RSI, way overbought. We barely got that on that move up to $80 in pre-market. Barely got that. Okay. Volume, it's gone. It's completely disappeared. Second lowest volume, okay, this year. Completely dead. Gone. Evaporated. Where is it? Well, that's the ultimate bullish signal to me. They're running out of ammunition. Liquidity's drying up. Reverse repo, poof, gone. Lowest it's been all year, right? Lowest it's been in 4 or 5 years, since 2021. You have a company that generated a tremendous report in its quarter 2 financials. 32% beat on earnings per share, 8% beat on revenue. You're telling me after that, no one wants to take a flyer on this stock that gets better, typically business-wise, as the year goes along, meaning their quarter 3 and quarter 4 likely looks even better than their quarter 2. You're telling me that they're going to sell that off 30% and no one's taking a flyer, that there's no one going to punch in a huge order here? Wrong. I simply do not subscribe to that logic. I think it's very dangerous to repeat those things. And I would urge anyone that falls into that trap or that's being gaslit and you actually are believing that rhetoric that I think, by the way, is manufactured. If you really think that, go back to where we began this video. Let's put a bow on this by one more time, looking at what matters. Revenue and net income by fiscal quarter. Look at the green bars here. Profitable. 5 in a row. Let's go for 6. Go GameStop. I'm tired of people repeating the same line ad nauseum. Hope you guys are well. Go GameStop. Let's see some green. Oh, and I nearly forgot. I don't do hype dates here, but you know what would be a concrete hype date? When Roaring Kitty first updated his chart, maybe the date's been here all along, the 26th of April, the Time Magazine stamp. Think about these things. Something happening after April 20th. Well, could this be a 2-year equity swap? Maybe, but you know what would also be around this time in 2026? Think about it. GameStop could post its best year in company history in terms of profitability. Profitable history, year, whatever, however you want to say it, that could be the case around that time in 2026. And you know who's going to get them there or could get them there? Ryan Cohen.